The price action in Dow on Friday, how Asia has moved this morning, these are clear indications of the fact that global financial markets are taking heart from the latest communication which has come from the U.S. president. And if one goes by the basic messaging is that, look, we need to be conscious of what's happening to the American economy, but we were at a trade war. We are now trying to negotiate what could be called as a common ground. Peter Cardillo joins us. Let's take that story forward. Peter, good morning. Do you agree with my assessment?
Well, I think, what we had here was a baby step forward, and certainly from a psychological standpoint, it's going to help. I think it'll help the markets, but I don't think that that it's going to accelerate economic activity anytime soon. So by that I mean we're probably going to still see slower growth in terms of the global economy. There are still a lot of questions unanswered, and who really won this first round, I suspect is still an open question. The Chinese are going to be buying anywhere from $40 to $50 billion more in agricultural products. I guess that's certainly a plus for the United States, and a plus for China is that the tariffs that were scheduled to go in place on the 15th are now been suspended. So China wins from that perspective. But remember that the core of this trade war has yet to be answered. IT properties, intellectuals, etc., and that's probably not going to happen until after the elections, if it ever happens.
Fair enough. Peter, we've had some brokerages saying that tariff escalation remains a meaningful risk. Remember, they haven't reversed the initial set of tariffs. Yes, you're right that at least we're not seeing further tariffs for the moment, and markets definitely seeing a bit of relief on the back of that. But do you feel that perhaps there could still be an overhang of the trade talks, or do you feel that this will now lead it to a constructive close? What's your sense?
I think it's going to, it's going to linger on. Let's say the second phase of these talks are probably going to linger on. I think that China really doesn't want to make a deal right now. They know that President Trump is facing elections, and so they can drag it out. The important part, I think, is that they slow down the process of an accelerating trade war, and that's the key. So, like I said before, in terms of economic activity, I don't think it's going to have much of an impact. That is, in terms of the global economy slowing further. And so, the markets are likely to rally on this. Let's not forget that this week we begin with earnings. We have banking earnings that are coming out. And, of course, we also have some important macro news, such as the Beige Book, retail sales, and leading economic activities, economic indicators. And so, these factors could either add to positive market sentiment or decrease it.
Okay, so lots to keep an eye on there, Peter. Thanks so much for joining us this morning and taking us through your view. Still a little cautious on how things will pan out, but for the moment, at least, markets definitely happy with that.